All right, welcome to this weekend market analysis. And as usual, we are going to be looking into the charts, just a few charts. The market as a whole is a very perfect recipe for losing money, so to speak. You really need to be extremely careful with current market situation as it is. I have gone through all of the charts, and in fact, it is one of those situations where the charts generally are quite difficult to analyze. All right, so in this review, we are going to be looking into just four pairs, one, two, three, four pairs only, just to analyze their directional biases or their current market condition for us to know where to trade. All right, before that, let's go into the Forex Factory economical calendar to see those high impact news announcements that are scheduled for this week. As you can see, it is Monday is going to be bank holiday for Japanese yen crosses. Well, that should not affect the market significantly. Usually, it is bank holidays coming from the American dollar axis that affects the market very significantly. So with this one, I am sure price will still move as normal. Okay, it is going to be a less busy fundamental week for the forex market. You can see we have only a few high impact news announcements for this week. You want to also pay attention to the Australian dollar employment data. This should cause some market volatility early in the morning on August 15 for Australian dollar crosses. And so that is the most highest of impact news announcement for this week. Having said that, let's move into the charts and conduct our analysis on those four pairs. All right, the first one is the American dollar against the Canadian dollar. Let's see what's been going on in the 1 hour time frame. Last week we actually shared this chart. We talked about looking for short opportunity around that zone, and price actually made that pullback, banging off the confluence zone. All right, unfortunately that happened with so much volatility, with so much violence. We were never given the opportunity to jump in based on the trading strategies, and so we didn't take any trade here. All right, we didn't take the trade, but at any rate, we are seeing some form of confusion right now in this chart. In fact, the charts generally, if you look backwards, sideways, up a bit, sideways again, downwards, sideways. In fact, there is just no clear directional bias to trade, and that is why the market as a whole has become extremely difficult to trade based on the current condition. And as traders, you want to be patient, keep following. All right, just keep following the chart, looking for the best opportunity that will come, and they will certainly come. All right, they will certainly come. Okay, so what are we expecting here now? Well, we have this line here. This is very valid. You can actually see those bounces there. Okay, it has been holding price as resistance. You can also see how price has been finding difficulty around that zone. Okay, around that zone. That means we may be having some form of free channel. Okay, some form of a channel. All right, it is not really clear enough, but we may be having some form of a sideways price behavior. That means we may be seeing another push again, then maybe another sideways. It is just this type of sideways price action that I am seeing here, and with this kind of price behavior, it is extremely hard to trade here. So just be patient, avoid trading here for now. In the daily time frame, we got price resisted around this zone, right around that zone that we talked about, coming back down, but it still has a level of support. So the bulls are still fully in control. the bulls are still very active until this level of support breaks to the downside. For now, we are likely going to have maybe a bounce again to the upside. Well, let's hope we get a breakout, because I know we are still most of you are still holding your previous short trade. We hope we get a breakout. Otherwise, to be very honest with ourselves, this is still within the bulls territory. Okay, still within the bulls territory, although in the very long run, in the weekly time frame, price is very likely going to come back down. All right, but we don't know how much of hesitation that is going to happen. So we'll just keep watching and waiting, but I know that price is going to come back down. Okay, so let's just be patient with that. For now, there is nothing to trade here. All right, let's move on to the next chart. The euro against the sterling pound. We got involved in this trade. I was actually, in fact, I never envisaged this channel. It is something that has happened over and over. And for those of you who have been with us for some time, you will know we have experienced this kind of trap. All right, we have experienced this kind of trap over and over. The directional bias itself is very clear. All right, it is obvious that price is reaching an exhaustion point, and we are likely going to come back down. But the entry was not nailed at a very optimal zone in the medium time frame. If I had conducted a more in-depth analysis, I would have anticipated this channel leg and possibly be looking for my entries around that area, not here. Okay, so right now the trade is suffering from this loss, and it is not looking good already, because most of you are not feeling too comfortable. But let me assure you that this loss is just normal. All right, it is not too much. We are still very likely going to come back down. Let me take you to the weekly time frame. In the weekly time frame, this is our trade. Okay, we took the shot right there, not here, not here, or not even here. The shot was taken at an area of resistance. Okay, an area of resistance. And of course, I am also visualizing that price is trading around a point of confluence right now, point of confluence with this previous swing high and this anticipated channel leg around that point. Okay, and this is the lower boundary here. So if you took a trade anywhere around here, if you are actually trading anywhere around in here, you are trading at an optimal zone, because sooner than later price is likely going to bounce to the downside or even be in a range. So in this kind of trade, it is extremely difficult to take a loss, except if you deliberately want to close that trade out in a loss. After all, what we are likely going to see is price hesitating around here, coming back down. So if you are patient enough, we are definitely going to close this trade out with some profit. I don't expect, although anything can happen, but I truly do not expect the price will just keep pushing to the upside. This is enough run already from here. That is enough run already. It is time. Just go back history, look at price movement. After that too much run to the upside, there's likely going to be some pullback, and I am expecting the pullback to maybe somewhere in here. Okay, I'm expecting the pullback maybe to somewhere around in here before we can bounce to the upside. So hold the trade, don't be shaken, just be confident, hold the trade. Okay. All right, in the New Zealand dollar against the American dollar, well, this is one of those pairs that I would actually have taken a short entry, expecting price to come back down. But the kind of price action in the long term is really confusing. Look at the daily time frame. We had excuse me, we had a previous swing low, previous level of support, which is now acting as resistance. Okay, can you see that? It is a beautiful setup. In my opinion, it is something that on a very good day, I will not hesitate at taking the trade. Okay, even sorry, let me adjust this thing. uh, okay. All right, so it is happening at a very nice area that on a very good day I will not hesitate taking the trade. It is a nice setup right there. I would have loved to take the trade, but for one reason, we are not going to be getting involved. Look into the weekly time frame. In the weekly time frame, you will notice how price is actually trading around that level of support. Okay, let me try to zoom that in. Okay, let's keep the weekly level of support here. Okay, change it to blue. Just keep it within the weekly time frame. All right, so you can actually see right now the price is trading around a level of support, and you really do not want to hit on your sell button against that level of support. In the other hand, let's connect these lows, this counter trend line. All right, let's connect that counter trend line. Let's keep a line there. Okay. All right, so that bounced here. This one here coming together around that previous swing low. You can see that. So price is actually trading off a point of confluence in their weekly time frame, and that is not an area that I want to click on my sell button based on this daily nice setup. All right, I don't want to trade against this level. If price pushes to the downside, well, so be it. No regret, but hey, the principle here is that I don't want to trade against long-term level of support. I won't do that. Okay. All right, so I just really wanted to show you that, and asking you to avoid being trapped around that area. It could move to the downside, but why do we want to put ourselves in that condition of trading against long-term support? It is not just an ordinary level of support. It is a point of confluence. All right, it is a confluence point, and you don't want to get involved in going short around that area. All right, okay, I can hear somebody asking me how about going long. Well, going long, you want to hit on your buy button. Unfortunately, we trade a strategy, and the strategy has not called for any entry, and I am not interested for now until I find a valid entry. We may be having that form of channel here. Okay, you can see the type of zigzag. So from here on, price can push to the upside, but it is not confirmed, and that is why I am not taking the trade. All right, the euro against the American dollar. Let's just start up from the daily time frame. Well, from this analysis, from the chart analysis, you see this is a level of support coming around in here as resistance. You can also see that the price has broken a level of a former resistance, and now price is trapped in the middle of that zone, some sort of confusional area. In fact, that is a dark spot for this pair. This is a place that traders should not trade around that area. Okay, aside from that, I am also seeing other multiple levels of support and resistance around this zone, that the best course of action is to stay flat, avoid trading here. This is one of it. Let's take this lows. All right, take that low. You will see how price has been reacting of that counter trend line. All right, so you can see that reaction there. You can see this here, this one here. There are just too many levels of support and resistance around this zone. So for the euro against the American dollar, best course of action here is to avoid trading here. If you go short, you might be going short against that level here, which could act as support. Okay, if you go long, you will be going long against that level, which could act as resistance. So the best thing you want to do is to allow price to move away from this junction where we have support and resistance. So let's have a clearer picture before we want to trade. All right, thanks for watching this video. It's been a long one already. I am indeed sorry for the long reviews. For those of our Muslim friends that are celebrating, I share in your joy. I actually share in your celebration. I am wishing you the very best as you are celebrate this season. We are with you. We are celebrating alongside with you, and we hope after your celebration we are still going to make money together. Okay. All right, if you have questions or contributions, feel free to send them across and we'll be very happy to discuss them together with you. Do have a profitable trading week. Bye bye.